Thank you for standing by, and welcome to the Limeade Second Quarter Investor Conference Call. All participants are in a listen-only mode. There will be a presentation followed by a question-and-answer session. If you wish to ask a question, you will need to press the star key followed by the number 1 on your telephone keypad. I would now like to hand the conference over to Mr. Henry Albrecht, CEO. Please go ahead.
Thank you, operator, and thank you all for joining the call today. My name is Henry Albrecht, CEO of Limeade, and I'm here to present an overview of our business activities and cash flow results for the quarter ended 30 June 2020. Joining me today is Toby Davis, Limeade CFO. Let's start with COVID. Clearly, COVID-19 continues to impact business activity in the U.S. and elsewhere. I mentioned on our last quarterly call, Limeade has specifically designed action plans, activities, and programs to help our enterprise customers navigate through this crisis. Limeade uses our robust employee app and communications capabilities to reach remote workforces with supportive employee engagement and well-being offerings. Limeade has observed a significant increase in the utilization of our employee experience solutions from existing customers in the period 1 April to 30 June versus the prior corresponding period. Indeed, several of our largest enterprise customers have shared with us that they view Limeade as a vital partner during this period of uncertainty. Supporting this observation, the company has not experienced a material increase in customer terminations or non-renewals, i.e. churn, as a result of COVID-19, with net revenue retention or NRR at 98% as at 30 June 2020. As we mentioned in today's release, Limeade has experienced some delays in finalizing contracts reflecting enterprise budget uncertainty due to COVID-19. Despite these delays, Limeade does expect to finalize a high percentage of current contracts under negotiation. To repeat, Limeade does expect to finalize a high percentage of current contracts under negotiation. Today, I'm delighted to report we've completed an internal review of our outlook for the second half and the full year ended 31 December 2020, and are now forecasting a significant improvement in our FY20 EBITDA loss expectations from $10.7 million US dollars to a revised EBITDA loss of between 5.5 to 6.5 million US dollars. We forecast a net loss after tax of between 7 to 8 million versus previous guidance of 12.4 million. Our revenue guidance of 56.1 million remains unchanged. Our upgraded financial guidance provided today highlights our strong customer relationships and the adaptability of our business. Costs are lower than previously forecast due to lower sales and marketing costs associated with the reduction in travel and face-to-face marketing events and a slowdown in the rate of new hires consistent with COVID-19 restrictions and uncertainty. Importantly, we're seeing increases in longer-term demand for solutions that empower more effective communication with increasingly remote and distributed global workforces that support employees' physical, emotional, and financial well-being, and that drive increased employee engagement, connection, safety, and performance. I will now turn the call over to Toby Davis, who will walk you through the operational and financial highlights for the quarter. Thanks, Toby.
Thank you, Henry. During the quarter, Limeade signed an additional 2 new contracts representing growth in the European business of our engagement solution offerings. Overall, Limeade expects an increase in the signing of customer contracts in the second half of the calendar year, with most services launching in the following year consistent with our prior years. During the quarter, the company recorded cash receipts from customers of $17.3 million. Net cash receipts from customers after adjusting for payments made in relation to the sale of third-party products and services was $10.5 million. Investors will recall that receipts from direct customers are typically higher in Q1 of each year due to the seasonality of annual payments, with a greater level of invoicing having occurred in Q4 2019 and Q1 2020. Third-party payments of $6.8 million were flat versus Q1 2020. Cash payments during the quarter were primarily directed towards staff costs of $8.5 million, administrative and corporate costs of $2.8 million, operating costs of $800,000, and advertising and marketing costs of $600,000, and research and development costs of $300,000. Staff costs declined 33% over Q1 2020, reflecting the payment in the first quarter of staff bonuses earned in the prior financial year. Net operating cash outflow for the quarter was $2.6 million, reflecting the timing impact of customers with annual upfront subscription fees, which are typically collected in Q1 of each year. We are currently tracking under our expenditure plan from the funds raised in the IPO on ASX in December 2019, with cumulatively $11 million of IPO proceeds invested to date. In the second quarter, sales and marketing, research and development, and general and administrative expenses were under plan. Due to COVID-19, we saw a reduction in travel expenses and transitioned our marketing and customer events to a virtual environment. Additionally, we reevaluated the pace of our hiring plans in Q2. However, we continue to maintain hiring momentum in key strategic areas. As mentioned in today's release, we appointed 2 senior executives, one in sales and one in R&D, with direct and relevant industry experience. The company's headcount at the end of Q2 was up nearly 7% to 275 employees versus 258 employees as at 31 December 2019. We ended the quarter in a cash position of $28.4 million. We continue to preserve financial flexibility to execute on our strategy to drive long-term value. Our capital plans also allow us to drive organic growth with disciplined strategic acquisitions that complement the Limeade employee experience platform. I'll now turn the call back to Henry.
Thanks, Toby. In summary, our business continues to perform well. We're certainly excited to move into the second half of the year when we typically sign the majority of our enterprise contracts for launch and revenue recognition in the following calendar year. We're also pleased to be delivering a significantly improved EBITDA performance for the 2020 financial year versus our previous guidance. I would now like to hand over to the operator for the question and answer session. Thank you.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you're on a speakerphone, please pick up the handset to ask your question. Your first question comes from Brendan Kelly with Moelis.
Hi, Henry. Hi, Toby. Thanks for taking my questions. A couple from me. Firstly, just on the new deal activity, can you just help us understand how that's progressed throughout the quarter? Because I imagine it was probably pretty slow at the start of the quarter and just wanting to understand to what extent things have started to pick up in June and July.
I would say without revealing kind of detailed monthly pipeline information, I think it's important to note that there was a real freeze of enterprise activity of all sorts for a couple of months. Here in Seattle, Washington, our headquarters, we were one of the earliest hit places, and I would say starting in March all through April and May, there were, I would just say, significant panic, fear, and uncertainty in the enterprise buying cycle that we saw loosening up in June and certainly into, I guess we'll stick to the first half of the year. So into June, significantly loosening up, increasing, and we have early metrics, things like meetings and other things that we've seen pick back up. I think the United States has some challenges with COVID-19 and is our core market that perhaps other parts of the world don't have to the same degree. But yeah, we're seeing momentum pick back up.
Sure, thanks for that. And then just if we're sticking to the first half then, so the two contracts this quarter were engagement modules in the EU. What was it in the first quarter in terms of the 5 that you won then? And then where are you seeing the most opportunity now in terms of the near-term pipeline?
I'll take the first part of I'll take the high-level part, and I'd invite Toby to comment. I would just say I don't expect a material change in deals that we signed this year versus the prior corresponding period in terms of the makeup of our business. We sell well-being and engagement as kind of the two flagship parts of our product, and I don't I don't get too caught up in the kind of the quarterly or seasonal differences in what signs when. Toby, anything you would add to that?
Yeah, Brendan, thanks for the question. Specifically, the 5 deals, the majority of those deals were also European engagement solutions signed, and I believe one well-being deal.
Okay, cool. Thanks for that.
Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. Your next question comes from Tim Lawson with Macquarie.
Hey, gentlemen. Thanks for taking my questions. Just 2 in particular. Just with the new clients, can you just confirm they're new name clients or that in the EU? Are they existing clients in North America expanding their sort of footprint with you, I guess? And also just on the sort of staff and travel costs being lowered and your sort of comment around still ability to sort of complete the pipeline. Can you just sort of expand on that, whether those staff costs and travel costs are having an impact on your expectation of building and converting the pipeline?
Henry, I'll take the first question. Thanks, Tim. The deals that we signed this quarter were new logos in Europe, so they're not customer expansion.
Okay, thanks.
Yeah, and to take the second one, I would say we're significantly staffed up to deliver on sales and marketing growth. The savings we saw, much of them were in the transformation or reinvention of a lot of our event-based marketing into webinar-based marketing. Webinar and other digital marketing are effective marketing vehicles for us, highly effective, and they kind of uniquely showcase the Limeade Institute science that we share on topics like burnout, inclusion, which is a very hot topic in the North American market right now, employee engagement, and broad topics of well-being. So I think that's the bulk of the savings. We remain substantially fully staffed in our quota-carrying sales functions in both North America and Europe.
Thank you.
Thanks, Tim.
Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. There are no further questions at this time. I'll now hand back to Mr. Albrecht for closing remarks.
Thank you, Brendan. Thank you, Tim, for your questions. Thank you, operator. Appreciate your support today. And thank you all for joining the call and for your questions. We look forward to updating the market throughout 2020 on the progress towards our stated objectives. Onward.
That does conclude our conference for today. Thank you for participating. You may now disconnect.